Hi guys, Michelle Massio here. Thanks for joining. I'm going to make a quick video and I'm going to go over why you should not freak out if a stock that you're trading or a stock that you're thinking about trading goes down significantly in value. Why you should embrace that and not freak out because you can still make money of it from it. So stay tuned. Let me share my screen here. Okay. Alrighty. You guys can see my screen, right? Let me show you Moderna. Now, as I start, I do want to let you know, obviously, there's always going to be risk in the market. You could make money, you could lose money, you could lose all your money, perhaps. My point here is to help you make smarter decisions. Okay, I'm going to put my timer on my phone. I'm going to do a video in less than 10 minutes. I want these to be very quick and inspirational and educational. So let's take a quick look at Moderna. I don't trade Moderna a lot. It's a pharmaceutical company. They are very into the COVID vaccine. It's got a lot of volatility, so I do trade it here and there. And it's come down a lot in the past couple of weeks or so. It's come down from like 180 to 106 bucks. So what is that? Like it's come down a pretty good chunk, 40% or something like that. So Moderna currently is down a little over 4% today. You'll see this number here. This is the change today from yesterday. Here is just a quick 52-week chart that we're going to take a look at. Each tick represents 1 day. So this just kind of shows you what has Moderna done throughout the year. Obviously, it's gone up. And then, like I mentioned a moment ago, recently it's come back down. So let's say as an example, you want to participate in some of these like COVID vaccine type of, investments. Right now it's come down a lot, so it might be a good opportunity to get in. I'm going to show you a quick trade idea where you can actually get money, get paid money in order to buy it at a lower price than where it's at now by selling a put. Super, super easy. People think selling a put is confusing or it's hard or it's risky or all these crazy different things, but it's not if you, do it the right way. So I'm going to show you the right way. Okay, let's take a look. Now, Moderna right now is at 106.55. Okay, 106 bucks. Let's say when you sell a put, you can pick where you want to buy the stock. Let's say you want to buy Moderna. You could pick what price do you want to buy it at? Do you want to buy it at 100 bucks? Do you want to buy it at 102? Do you want to buy it at $95? That's how it works when you sell a put. I'm going to give you guys an example. And hit me up with questions if you have questions as we go, afterward as well. Let's say, for example, you want to buy Moderna or you would be comfortable buying Moderna at $100. You also get to pick the time frame, by the way. So let's say we want to look at like a 1 week contract. So we don't want to lock in for a long period of time. We don't know what the market's going to do, 2 weeks, a month, 3 months, 6 months from now. We want to do like short periods. We want to make little bits of pieces of money ongoing, right? So let's just use this as an example. We're going to sell a January 8th put. That's next Friday. So today is Thursday, but tomorrow's a holiday, right? So it's going to be a week from today, basically, because tomorrow the market's closed. We're going to sell a $100 put that expires next Friday. Now the premium right now, if we look at my platform here, here's the strike price. If you're confused by any of these definitions, I have other videos that go into more depth, but this video is just going to show you how you can embrace if a stock is going down, how you can like not be sad about the price going down and you could still make money. So that's what the point of this video is. Let's say you want to buy, you want to sell $100 put that expires next Friday. Let's say as an example, you would be okay with buying 100 shares of Moderna at 100 bucks. Now, if you had to do that, 100 times 100 is 10K, right? So 10,000 bucks. So you can use margin when you buy stocks. You don't need the whole $10,000, but you do have to have sometimes $10,000 in your account in order to make this trade. So this trade might or might not be good for you, depending on how much money you have to start with. I'm just using it as an example, okay? I want to make videos each and every day, and some videos I'm going to do on one thing or another thing. My point is I just want to teach people. I just want to show you how you can make money in options and how easy it can be. Right? So let's look at a January 8th put, $100 put. Right now it's trading for $249, $246. That's the bid. Again, if you're confused by any of these things, We're gonna have we have other videos that talk about those things. What that means is you get paid $246 in order to make this trade that gets dropped into your account right now, right? So 246 bucks. Let me go over um, the rate of return. So today, and I have copies of these spreadsheets. If you're interested in getting any of these information, hit me up. I have a group that I provide this stuff to the participants. Let me know. So Moderna right now is trading at 106.62, right? 106.62. We're going to look at $100 put. Right now, it's got a delta of 28.1 to be precise. What that means is it's got a 28% likelihood that Moderna is going to go from where it's trading now, which is 106.69, to $100 between now and next Friday, only a week from now, right? So it's not very likely. But if it does, you're going to buy, or you need to be prepared to buy 100 shares at $100. And for that, you're paid, right now it's trading at $249. Okay, $249. I'm going to say you have to have $10,000 in order to make that trade, because if you were to need to buy it, it's 100 shares times $100 per share. Here's what that means. Assuming Moderna does not go to $100 or lower between now and next Friday, that means you don't need to buy the stock. You still keep the $249 that you made, which means that you make an annualized premium of 113%. How did I get that number? It's just mathematics. I mean, you're holding it for 8 days. You made about 2.5% on an 8-day hold. So if you annualize that out, and if you do that all the time, you're making 113% on your money. This is what I mean by the fact that you can make a lot of money with options. So we're about 6 minutes in the video. I'm gonna only go to 10 minutes, right? I want to keep these short and sweet. A couple other things I keep track of. How much does Moderna have to go down in order for you to have to buy it at $100? It's got to go down another 6.25%. So right now, Moderna again is trading at 106.35 at the moment. Obviously, it's going to change. This is all real-time stuff. So if you have to buy it, if it reaches 100 or lower, it's got to go down another 6.25%. It's already gone down like a big chunk of money over the past couple weeks. So this is kind of a way that you can buy a stock at a very attractive price if you're interested in that stock and if you're interested in that particular price, and get paid to do it. So it's kind of a cool thing. So that's my example on Moderna. I'm going to put together some other examples. Follow this channel, subscribe below. I have a YouTube channel, and then I also have a free Facebook group where I'm going to be putting a lot of these videos. So let me know some other videos that you might want to see, and happy trading in the meantime. Cheers.